We have MMT David with us who took a long position. We can see that opening gap. You can see that teeny, oh my goodness sakes. 1, 2, 3, 4, 5, 6, almost about 7 really. Well, it is 7 teenies over here, 8 teenies. And I talked about this on the opening bell. They can go that many teenies. And you could clearly see how that downside move is. Now, David, that was the short side of the tape. When you went long, can you tell me what you did in this process, sir?
Right. When it got down, I was putting in a bottom. I tried to get in just above the bottom in the 111 area, and it wouldn't let me. It just moved so quick, and so I just got in.
So 111.71 is the low of the day, and so you were down here. Okay, so were you making a market with the public between the buyer and the seller at that point?
Right.
Okay, and what confirmed you got in? What confirmed the move? What tools did you use?
That green bar come up and closed up above the red bar, and then on the second green bar, I knew it was time to get in when it went above that 10-minute moving average.
Oh, well, that's a lagging indicator. But wasn't there something in the platform, too, that the low end of the price print is above that high price print body here? And then you just pennied right up. You want to see how many pennies that was? That was $2.17 right down here. Here, let me pull this up here. Very good, David, because in that bar, right here under the VO1 column, from that bottom up, it tells you right here, $2.17 ratio. And you know what else? You know what else, David, it told you? $1.74 above your previous bar ratio, closing half, ascending ratio value, equal price strength above the diamonds. And then what kept you going?
Well, I kept closing above the half bar, so I just, it was to be in. I was on the right side for sure.
Okay. Were you looking at closing half bar above the previous bars in that ascending breakout? Right. Okay, so you stayed in. You had a big bid pop, and you were staying in here, but something happened over here. And you got stopped out in here. Is that true? Right up here at the high?
Right.
Wow. And, yeah, you've come down as expected, a 2 teeny range, but you did bookmark the positive entry and exit debit, and now you're going to be watching to see how Wynn sets up and wants to make a move higher on this options expiration. Is there anything else you want to tell me about what tools you used to come out at the high? Because other people never know when to sell, David.
Well, it did make it above the 50 on the IR, but it didn't hold it. It didn't hold it, and when it broke down from there, after about the third attempt, I figured it was time to think about getting out of it. So I moved my stop up, and it did come down and take me out.
Okay, but so the success part of the transaction was that you were moving the stop up.
Right.
And that is, that from your entry cycle here, and how that, because this was the intraday morning opening bell low. And this is right on the opening bell. That's excellent.
And Wynn has today a particularly large teeny, and
it does $1.19. Right. So what do you call that? Expansion?
Oh, you know it.
Oh.
And Wynn is very volatile. I mean, you'll get teenied out on that sucker, just trying to keep a stop. So you have to give it a lot of room there. And teeny was a lot of money to try to.
So did you cut your ratio to like a half a teeny? But you want to be careful. It's always going to be about where the entry is.
Yeah, so, it'll stop you out on any given day over a teeny.
Okay.
It's a tough one. It's a tough one to follow with a stop.
Okay. So basically, what you've learned then, that when you do get your gain, you've learned to sell those moves and actually add those as positive debits.
Right.
And because you can get in. If you were going to break above this big half bar right now, because this is live, and it's 7:18 a.m. Pacific Standard Time, okay? and it's 9/30, 2011. It's a Friday, and it's Wynn Resorts. And Wynn has been coming down for several days to get down here from up there when you were shorting it, up around the 160 to 170 handle, right?
That's right.
And now from trading that thing from the 160, 170 handle short all the way down to today's low of 111.71, you've watched the stock decline about $50 ratio negative over the last couple of months, right?
That's correct.
And if you understand how to use long-term position management entry and exits to volatility, because if you believe there's going to be a contraction and forward-looking, you can use a time limit. It could be a quarter or 2 quarters, which is 6 months, or 3 quarters, 9-month leaps. There's all kinds of things that you can use to take advantage of longer term versus what you just did now was rip a profit as a market maker between the buyers and the sellers and the public. And you do that several times, that equals doing that as well, doesn't it? So if you know where growth contraction is going to be, you could have long-term put options, as we were saying back then, that the $100 puts, when it was at 160, that's the time to be buying that side of the market, because that side of the market was the cheapest side relative to the strength of your reports and why they would be what they did. And then to even go as far as to go through the training process, that Wynn is still making great money in Macau. Granted, 5 times more than I think the Las Vegas Strip revenues and whatnot. David, that's an excellent trade. I'm going to give you a half bar right here at 118.19 on Wynn. That's that left elbow high straight down. Any prices that come up to here now, you would be looking for what, sir?
At 118?
If you come up to this half bar area right here at 118.19, sir, okay?
All right.
And you hit that wall of resistance, what would you be looking for between the buyers and the sellers at that current area, up in that area, should you break out up there? What would you be looking for?
I'm not sure what you're wanting. Mary.
Well, would you be looking for an immediate reversal at the half bar? Between the buyer and the seller, you're going to look at the strength of this half bar right here.
Oh, okay, I see. Yeah,
I would say so. Right now, you're printing at 116.74 by 116.89. Okay, so basically, this is your half bar going up in value. If you were to break a flash trade with the high-frequency tape robot, and you had a limit order out there, that would be a safe order. Because at that price level, you're going to have you're going to have a lot of resistance. And what I'm trying to ask you, sir, MMT David, what I'm trying to ask you is, what would you use for your decision process to confirm that if that does happen?
If it didn't hold a half bar.
Okay, so you're going into resistance at the half bar. So the proper way of us saying it is that price resistance at that half bar between the buyer and the seller, that you would be looking for the immediate drop in the IR. Everything would start to go the opposite way into that wall of resistance to confirm it, just like you did with the diamonds going long here. So if I have a limit order out here, let's see where the bid and ask is. 117.42, 546. It's going to come up to this half bar, 118.19 in my info panel. So at that point, if I go up and they start to drop the bid right away, and it can't close above that half bar and consolidate, then, and we start to go weaker in the readings, then we know to get short, right?
Correct.
All right, so we're going to watch that wall of resistance. We're going to see what will happen with Wynn at that price level if we make it. Right now, Oh, 118 on the ask, 118.11. It's coming to that half bar, 118.19. And when it comes up there, we're going to see live. This is all live. We're going to see what happens with that buyer and that seller. There it is, 15 cents. It's not there. 14 pennies on the ask. Now the spread is 14 pennies wide. Now you're minus 40 here. And if this goes back towards 73, that would be a way of you understanding a reversal, wouldn't it, David?
Yes.
Excellent. So let's see what happens right here at this very wall of resistance of this big opening teeny reversal bar is what happens when they get weighted back up here. And right now, we don't know yet, but we're going to find out. We have a plan that will help us. And if we're going toward 35 here, well, then we know that this move is still strong, right? We're at 61. We got to stay below 65. But you're not getting above that half bar, 118.19 pennies. You're falling now below it there. And you take a short within the volatility, as long as you know that you don't close above and consolidate there. If you keep going back up to 118.19, you'd add a little bit, because we can see in that diamond reversal at the top, it's just a little teeny bit, and it was just in the bid and the ask, okay? And once again, it's that half bar. I give you an A plus on taking a long positive market maker debit, how they also like to pull back and go up a little bit more. And the higher that they go up to challenge the major resistance areas here is where that buyer and that seller is going to be weighted with Wynn. And as a market maker assignment for David, he's doing quite well, because he could take the long debit. He can also take short debits too, because he does all the time. And once again, it's how we associate and identify the weighting between the buyer and the seller. So it's either advancing or declining. Here we are. We're right above that half bar. It's 59 by 60 pennies. And it's narrow range. There is no blowout buy signal, because when you're going through these major resistances, you want to see 3 teeny breakouts through them. We're not getting that here at this price level, everyone. And whenever you get to a big, teeny downside contraction on the opening bell, meaning that it didn't stop going until here, and David made a market, and he's watching what's going to happen here. When you're long, let's say you're long, you want to break through here, but when you're going through it, you want to go through it with 3 teeny candle upside. So 1, 2, 3 would bring us right back up here. Okay? That would be a 3 teeny breakout. And in order for that to accomplish, you got to run toward 97 real quick. And that will be the next order up above the market, because as we continue to build right here at 74, and this is dropping to 0.33 relative to $1.19 per line. And so far, they've been taking it right on up there, and we're going to watch this half bar, because this half bar over here is going to be 118.08. That's going to be the support level. And the new resistance level, well, let's take a look at where we're at. It's here. The bid and ask is 119.12 by 28. Public price spread, 9 pennies now, 14. If they buy this side of the print, you will break higher, and this will go higher, as it just did. So let's take a look at our delta, and let's take a look at one on this particular chart. I'm looking at 120.78. It's going to be negative 1/4. So I'm going to go up here knowing that that 118.40 line, they're working it all the way over here, because they are. And so from bid to ask and teeny wise and everything. So that's what I'm going to be looking at, is what's in here. All right. The next level on Wynn will be 120.78 at negative 1 point, or that's $1.47 to get there. So you have to go $1.47 higher. It tells you. And right now, we're right in the middle here with Wynn at a major resistance level. The major resistance level is until you are closing back below this half bar, is that remains as support. And so you have to go higher up. Now, I'm going to show MMT's something here on Wynn. Is look at these, look at this bar here. This is really vital for this, because what happens is that once that selling started, look at where you went. That was a damn good haircut. Now you come all the way back up here to that reversal in this. This is called the SMF, market maker price action weighted bar. The public buyer and seller seems to be running out of steam right about here. The current bid and ask on the name is 118.35 by 118.49. Okay, you're challenging that where that put option, and looking at the 120 put that expires today would be transactional as well in that reversal right now. The 120 put, okay? And what kind of yield in that 120 put right now is at the wholesale prices. Here we are. It's a narrow range type of 120 put on Wynn. They trade a little bit different. It's at 640 by 670 now. The high of that was $9.15. The close, here, let's make sure you can see everything. So here, there you go. Okay, and let's make sure that you have, the time is 10:30, because it is, okay, slightly thereafter in the last print, that is. And what I want to tell you is that closing price at 350 and today's low is what counts. So there's your gap premium value here, 350 to 6.9. Then, but the real range was from the first lows of 6.9 up to 9.15. And on Wynn, that means that you still have a premium to 3.5 to hear 100% gain. Now, depending on what Wynn stock does here, relative to this half bar, is relative to where this bid and this ask market, because the low is 690 on the day, and it's 630 by 670. So we're definitely not retail to the market by any stretch of the imagination for the time period of 7:37 a.m. Pacific Standard Time, 9:30 up 2011. We've got a consolidation, and we have a fairly decent, nice move and a challenge to this price area. However, there is no buyer and there is really no seller. So we will watch these bids, because when we do at some point get to the failure part of this, this is a 120 put on Wynn, W-Y-N-N, 120. It's a 10-7 expiration. So it gives you a little bit more weighting than today's expiration, okay? Because the only date that I have is 10-7. So I've got 10-22 weightings. But once again, right now is, how do I get this wholesale market to right now? And I certainly don't want to buy the puts when it reverses and gets down here, because they're going to be a lot more expensive. And that's where I would want to sell them. We're at 77 on that IR. But guess what? That current trend ratio is ticking negative 0.31 with an intraday trend ratio low of 0.73, printing at 0.30. As we break higher, you can see the value of that 120 put coming back lower. You can clearly see that it's 119.77 by 120, and that's on the bid and ask. But the most important thing to know about it was that when it did pull back here, it held this half this half bar right now has changed in value when I changed it. So we're going to come up there and we're going to hit that upper end up here. So we've gone through the 118 area because that was an area that needed to be taken out. Here's the 116.72 when we got above those tops. This is where it started. However, notice that each diamond did never go closing below the half. And see how the bid pops come back right away? And they kind of hold and they go up. But then you have this narrow, and it's $1.19 per line in this low volume environment right now. And look at here. We're over here now. The low print was 690. So Rick Goley, go over there and bid me a contract at 610 right now. Just one. Because I want to make a low print below that.
Just to confirm, which one we on?
Wynn 120 put. Brian Plain, do you already have it loaded, sir? Here we are right now. And we're trying to create a print. And we need an uptick to get hit. So go 630. 690
I'm
is
625 right now.
So you're 625 and they're 640. Let's see what happens because we don't want to. We just want to create a print below the market so that the MMT is the one creating that for the whole world to see, and then how they're going to react to that print. And right now we're out there at 625. We're holding up there only because we're only using a one contract to create or make a market. So basically we're starting to slide that bid. He better go 640 and also keep one at put one at 640, but then drop it right away. And then go back to 630 and see what happens. Go back to go 635, go 10 pennies above the bid and work this side of the market. And MMTs are taught how to do it. So go to 640 and make a market above it. We got a small reversal. Now, make him pay it. You're going to create a low print. And you're going to create and build this position within $1.50, either up or down, positive or minus on entries. So pay $6.50 right now and see if he takes it. There you go. You finally made a market. But you made a market on the one contract. You were trying to get hit. You started to have a little bit of reversal. This is very indecisive. They could still pop that thing up right away, or they could pop it down. That's not why you bought it. The reason why you bought it was you wanted to create another low print below 690, and you did. Now, the rest of the people that are trading on it, the volume is going to be looking at your print right here and the time that it was printed, which was, well, 1042. All right? Now, you have to know that when you make a market with the wide bid and ask, that if markets are breaking higher, that's fine. Because of one reason. It's that wall of resistance that would have to hold that's going to give you the capability of selling out on the ask. So to make a market, you can create a print and put 640 out here because you're kind of breaking higher just to create a market and leave it there. You know you created that print. You know you're going to bid the same contract here, two more at 520. All right? So you'll put a limit order out there and you'll work the lower end of this entry based on this thing wanting to break maybe right back up here to this teeny. It's strong at 80 and it's above 75 and the diamonds are holding and there's no contraction, but you can still make a market and create another low print. So throw one out there at 620 on the ask and see what will happen if he takes it, because you could create another low and then have your market below the 520 here in case they walk away. You could get hit at the bottom now if this whole bid disappears. And that bid comes into play when this puts its high reversal in. It's not above 85. It's at 79. I can see my gauges right now. So, And now we're trying to make a market, and we're trying to create lower prints in here with the public. Okay?
We're the 620 on the ask, right?
Yes, because we're trying to create a low print so this side of the print walks away.
Wow.
All right? Now we did that. Now he's out there, sir, at 520 below the market. Okay? But he can always move back in here because now he's created another low. He's created two lows. One at 650 and one at 620. But only on one contract. Now he's going to go back in and create another market on that reversal at 630 above the 610 and try to walk this side up and go 630 now. 630, that's a dime above it now. Where is it? It disappeared all day long. That's based on that. Now he can keep one at 630 and go up to 650 and create the same market in that reversal. Keep one there and see. Go ahead. He can work them, and then he can come off of it right away, disappear, and then go back, and then go back, then go back, go to 40 cents this time. See if they throw it. They're only going to throw it to you if there's an uptick, but what are you trying to do? You're trying to see if this floor is going to hold, and you're trying to make these people make decisions because there's finally some engagement in the bid and ask. Here we are creating that emotion. There's 695 by 725, and never contracting. Thing of it is, there's that reversal.
62.
All right, you're short, aren't you, David? It failed.
Yes, I am.
Good. So we got an MMT short on the move. Here it is, that contract. And there's that first diamond reversal. Now he's going to watch what happens back here at the half bar reading. Okay? And we want to make sure that we got the reading correctly because we were still very light ratio-wise to getting there. And that's this big half bar down. Now they do know that they can go to a 60-minute chart